Liquefied natural gas was a growing business for many years, but since 2011, the market for LNG has been fairly flat. Is that all about to change? Paul Sankey of Wolfe Research believes so, and he's here to discuss why. So, Paul, tell us about the outlook for liquefied natural gas. Obviously, natural gas prices in general have been depressed along with oil prices. So what's the outlook for LNG?
It's great. I mean, in terms of volume, in terms of price, not so great. And you say that natural gas prices have been depressed. You're absolutely right. But if you turn them into barrels of oil equivalent, prices have been trading at, the sort of $18 a barrel type level as against oil considered to be totally beaten up at $50 a barrel. So you really have a much cheaper calorific resource here in natural gas. The nature of the industry, liquid natural gas, is really very high upfront capital to make these giant projects that take multiple years and huge numbers of billions of dollars to put together. The Chevron project that's just starting up, $60 billion, is basically the largest industrial project of all time, bigger than the Three Gorges Dam, to give you an idea. Wow. And of course, timing these things is almost invariably got wrong by the oil companies. So they just missed 4 years of $100 oil, whereas you said the market didn't grow. And now at 50, suddenly we have an enormous surge from two major sources, Australia and the US. And it's fascinating that the US is going to go from zero LNG exports to actually 50 million tons in a market that's currently 250 million tons. So an enormous direct expansion from US exports of LNG. It's a totally new story, and it will take US to the third biggest LNG exporter by 2020.
So what then are the secondary effects of this? In other words, can US natural gas supply service this new demand? How is it going to play out?
Right. So we absolutely characterize the Marcellus as the Saudi Arabia of natural gas. This is the biggest, cheapest resource of natural gas in the world. In fact, there's one county in Pennsylvania alone that supplies 5 BCF a day of gas, so over a million barrels of, nearly a million barrels a day of oil equivalent. So stunning amounts of very cheap gas are available from the hydrofracking theme in that region. So US has a huge role to play. The issue is that really it's going to pressure the whole oil and gas complex from a price standpoint, basically because demand is fairly weak and you have a lot of competition from renewables. So we're not sure that this is going to be great for pricing at all. In fact, we think it won't.
Among those companies out there that have some participation in LNG, are there good plays for investors?
Chevron, because they've got the largest amount of growth of any company over the next 5 years, so that's one. We downgraded Exxon because one of the offsets is that Exxon has an enormous gas field onshore the Netherlands, a European swing gas supplier, the Groningen field, that's been causing earthquakes, and they're gradually shutting that field down. So we think Exxon loses a lot of volume, Chevron gains a lot of volume.
All right, very good. Thank you very much, Paul. So what do you think is next for LNG? Leave us a comment in the space below or on the Yahoo Finance Facebook page.